Good day, ladies and gentlemen. London Mines and Money 2014 this morning again, the last day of the large exhibition here. And with me here is now from KNGSecurities out of London here, Robert Clarke, the head of metals and mining.
Indeed. Hi, nice to see you.
Thanks for taking the time.
Great pleasure.
What is KNGSecurities about?
KNG is probably Europe's largest independent bond specialist. It was started 10 years ago by guys from Morgan Stanley, Goldman Sachs. Has now grown to almost 30 bond salesmen covering all the European countries and the Middle East and the Far East. We have approximately 500 bond buying clients in those countries. We have a few in the United States, but mainly they're offshore funds.
Okay, fantastic. So when you say bond buying companies, that means that you finance mining companies, of course. What are your criteria to get companies financed? Because I think the markets are more dried out, maybe.
Well, it's been a very tough market. So obviously, one had to think out of the box. A lot of people don't like project finance because of all the restrictions. A lot of people are reluctant about going the streaming way because of the dilution. They're selling their gold at like $400 an ounce. There are other sort of lenders in the market, like well, I won't mention names, but which have off-take agreements, which are very expensive. So we came along with our bond structure, which is what's called an exchangeable bond, not a convertible. And that's an important distinction to make, because a convertible bond, as you know, converts into the shares of the issuer and is thus dilutive. And of course, at current depressed market prices, mining companies are most reluctant to do any convertibles or any equity issues.
Because you would dilute to death otherwise.
Absolutely. Whereas an exchangeable does what it does. It exchanges into another asset. And in our case, it exchanges into the GLD ETF, you know, the Spider gold ETF.
Interesting.
And at a premium, not at a discount or even at current market price. So in effect, the buyer of the bond is getting his interest through the coupon, and he's also getting a 5-year call on a certain number of ounces of gold at a premium to the current market price.
Wow.
By contrast, the issuer is paying a relatively modest premium, typically the sort of terms that would apply to a convertible, and is contingently going short of that many ounces of gold for that 5-year period, but at a premium. And if I take a premium of 25% on today's gold price of $1,200, that's going short at $1,500, which is kind of attractive, which is why we're getting a lot of traction in the market.
I can believe that. Do you have an actual example? Have you closed something in the last time?
We did our first one this year in May for Mandalay Resources.
Oh, great company.
Very good company, very successful, cash generative, dividend paying. We raised 60 million for them through this bond structure. And we were very, very pleased to have done that. Typically the bonds start at, convertibles start at bigger figures, 100 million plus, but they were very keen to do this. They liked the structure, and we liked the company and the management and their model.
Me too.
Which good. So hence we did that first one. And as a result of that, as often happens, that's generated a lot of other interest. So, you know, we now have a very healthy pipeline of companies which are both producers who are looking to either make acquisitions or expand new projects, etc., and also some pre-producers, which we can finance if their economics are good and if they're very close to production.
Okay. So at the end of the development phase.
At the end of right at the end of the development phase, we don't take any of that. We're really see us as substituting for project finance or streaming capital, those sort of things. And to be frank, as I say, we're not meeting, I wouldn't say too much competition, because everybody has their own preferences. But as we all know, a lot of mining, mining companies are reluctant to do project finance because of all the heavy covenants and restrictions and so on and so forth. Whereas our exchangeable bonds are very much like a typical convertible bond. In other words, they're covenant light and don't tie the company down.
Yeah, that's perfect. So how do you see 2015 upcoming? I mean, it's 3 weeks to Christmas. The year is done, 2014. Obviously, you started with that very successfully. You had with Mandalay, a fantastic company to finance. So what are the plans then for 2015, and how do you rate the markets? What is your feeling for 2015?
Well, first of all, I never make, let's talk mainly gold, although we're also looking at some silver ETF-linked bonds as well. First of all, I never predict the gold and silver price. In general, I guess looking at the trend over the medium term, I guess it's going to be upwards. There are no drivers at the moment, hence why we've got the market we're in at this moment. So therefore, when we're looking at a company to finance, we're looking at companies which have obviously got a good margin, whose cash cost, all-in sustaining costs are at a reasonable level, and for new projects where there is a very good margin of security and comfort. But the bond market is, some people say it's almost like the equity market on steroids. So bond market investors tend to, should we say, take more of a risk than a typical bank lender, much more risk, pro-risk. And of course, there is still a big search for yield. And without sort of going in specifically into terms, one's talking possibly around about the sort of 5% yield rate on a 5-year loan. That's not expensive. Mm-hmm. And particularly when you don't have the strings of project finance and you don't have the earnings dilution, which you get with streamers.
Absolutely. Fantastic.
So we have a good pipeline, as you might imagine. I'm looking forward to 2015 with, in fact, great confidence.
So you lined already some good deals up.
Oh, well, yeah, we're in talks with a number of serious companies. We have been for the last few months. I mean, obviously, we like building relationships. We don't want to meet somebody today and do the deal tomorrow. We want to get to know them. Mm-hmm. We also want them to feel comfortable with the structure, their boards of directors and their shareholders sometimes, and so on and so forth. So it's a gentle process which can take 6 months, a year. Mm-hmm. So hence we have these negotiations. So we've got pipeline for deals which may get signed and done in Q1, Q2, Q3, and even Q4 for 2015.
Great. So that sounds like the mining industry gets a financer now back to the market.
Well, I think so. I really do. There is money available to come into the bond sector, and there is demand, and our product has got attractive features.
Fantastic. Robert, thank you very much. All the best. Merry Christmas.
My pleasure. Same to you.
Thank you. Perfect.
Great. Okay.
Thank you. Yeah, ladies and gentlemen, that was Robert Clarke, the head of metals and mining from KNGSecurities. Yeah, you heard it. They do a new setup, a new trend. They finance companies out of exchangeable bond structure, and which is covered by the GLD. So very interesting way to finance companies. Thank God the companies in the mining space get now somebody as a partner who is large enough to do also bigger projects, and we will watch you carefully for the pipeline next year.
Great stuff.
Thank you very much. Bye bye from London.
Thank you.